Good morning, traders. It is Friday, August 1st. Hopefully everybody's had a good previous week. Last week I mentioned I was heading out on a fishing trip with the father-son trip. My dad, myself, and my son Ben, we went on a fishing trip and had a blast. I'll show you some cool clips and video at the end, but let's jump into what's been going on in the markets recently. So a couple of days ago, we had a little bout of panic selling. The stock market dipped into oversold territory, and then we had a bunch of news right after that, and we saw a big pop in the markets. It was very short-lived. It fizzled out right away, but that's what these little bouts of panic selling indicate. You can see over here, we had a little bout of panic selling, and then we had another pop. Again, 30-minute chart is more so day trading, very small moves, but we can nail and identify these. In a green market, we're looking for green spikes. When the trend is up, we're looking for panic selling pullbacks, where usually bargain hunters step in and the market rebounds. Now, we've been dipping into some oversold territory yesterday a couple more times, the lime green. Again, these are things in our book, Technical Trading Mastery. We show you how to set up these indicators and these overbought, oversold things on the charts. But overall, if you take a look, you can see on the daily chart, we had a pop on the S&P 500, followed by a sell-off yesterday, and even more selling today with some pretty big volume. So we short-term oversold and dip and a bounce and a pop, and now we're fizzling out with a sell-off. Now, the S&P 500 hit all-time highs yesterday. Let's just see if the NASDAQ did as well. Let's just go back to the QQQ feature or NASDAQ feature. So it hit all-time highs. Now, again, don't forget, these two indices have camouflage, meaning they have the Magnificent Seven pushing them higher, people thinking their portfolios should be going higher, but in a lot of cases, they're not. And we talked about this last week in the videos that I did based on what the VIX was showing us, what the VIX was low, and also the put-call ratio, which I talked about, this specific scenario that I follow for the market to tell us, hey, that it's about to start a pullback. If we look at the broad market, and the way I like to look at the broad market is the RSP ETF, which is the equal weighted S&P 500. So strip out the heavyweights and their weighting there, along with small caps and micro caps. And you'll notice since I talked about that, the market put in a high and it's been pulling back. Most portfolios have been moving lower for the past week from when I said that. And that's what I like to follow and get a gauge of, is what the overall market is doing, not what the S&P 500 and QQQ are doing at times, because they give you this false belief. They're hitting all-time highs really just a day ago, and here the markets have been selling off most portfolios for the past week with some elevated volume to the downside. So we are dipping into an oversold territory. I do think we're going to go into a bigger type of correction, and a few reasons for that. When we look at our QQQ trade that we had, we stepped out of the market. We avoided the crash. In fact, we were able to continue to grow our account as the market fell. We got back in. We hit first target, second target, and we hit our 15% target about a week and a half ago. And based on the QQQ, when the QQQ hits a 15% target after a trend change, we tend to see the market, it'll usually push a little bit higher, but we start to get volatility. And we are starting to see that volatility. We had a big gap up followed by heavy selling. This is a bearish engulfing candle, meaning it opened higher than the previous day and then sold down and closed below the previous day. That is not a very strong sign. Usually it means we're going to see more selling pressure take place. And that's what we've been talking about, how this market is pointing to that type of correction. So I am expecting today, when we look at the indices down the left-hand side here, the Russell 2000 is down the most, 1.25%, and the NASDAQ is down, and so are all the others. But we're going to see probably a spike of panic. You guys are probably, or those who don't understand the markets and don't watch these videos, there's going to be a lot of panic in the market. The VIX is up this morning, 12%. It's probably going to go higher. And that is just people making reactions, emotional trading decisions, and they're going to bail out of trades. Now, we are still long one position here, a small portion of our account with the S&P 500. We have one more target slightly higher. But overall, we've pretty much closed out this entire position, and we are back mostly in cash, waiting for the trend to change, to go to red bars and then find a new opportunity. And as you guys know, we like to focus on the 5 to 12 waves that roll through various assets each year. Obviously, this wave came to an end. We avoided that. We got in, we caught the next wave, and we've pretty much trimmed off all of our positions. And it really doesn't matter even if this pulls back. We have such a small position left in the stock market itself, and the rest just earning daily interest and cash at the moment. It really doesn't matter if this trend hits this target or not. It's not going to really move our portfolio too much. Our portfolio is hitting all-time highs, and this little portion that we have left in the SPY really is just a little bit of icing on the cake if we do get one final push up before I think we go into a bigger correction. But it does look and feel like we are starting that correction I've been talking about. Based on the NASDAQ, we should go into a multi-week or multi-month pullback. And the question is it 3-5%? Is it 15 or 20%? Is it the start of a bear market? I don't know. Nobody knows. And that's why we just have to manage positions. When the market resets, we'll get a new position to go long if it starts to go higher again. And if it rolls over and sells off, well, we'll be able to benefit by different positions as the market goes down. So let's take a look at the US dollar index. The US dollar, the daily chart here has had a pretty nice push to the upside. In fact, I'm going to pull up. Let's just see here. If we just zoom out, you can see the US dollar is trying to carve out a significant bottom here on the long-term chart. Let's just go back to the monthly chart of the US dollar index. If we go back in time and take a look here, I still believe, and this goes against most people's belief, which is usually what happens at major extremes, is I do think we're actually going to see the dollar have a very big move to the upside. Overall, we have a series of higher lows, a series of higher highs. This is a mega channel or trend to the upside. And if the stock market is going to start to break down and things fall apart, we tend to see the US dollar do very well. The US dollar had a big move back in 2008 during that crash. It posted a 26% move. Back in 2000, we saw another big move up here, 16% or so during that crash. Usually the dollar becomes the dominant safe haven, kind of this overall dollar futures starts to rally it. And we're starting to see that come to life. As Canadian investors, for those who are Canadian, if we take a look at the US dollar, Canadian dollar here, let me grab a pencil. I talked about this. I drew on this. This was several weeks ago. We talked about how we have these major turning points. Over here, this is a major turning point where people give up on the dollar. This is where typically the stock market, there's a major change. And this is typically when those who don't have a game plan, don't understand what's going on, they typically bail out of an investment. Over here, a lot of people, usually there's a big turning point in the financial system. Something's going on. This is where a lot of people will get into the US dollar, kind of paying a high. And then, of course, we're back into this phase I've been talking about that people are giving up on the US dollar and they're moving to Canadian dollar. And these are major turning points. This happens with the stock market as well. I've gone over this in great detail. Typically, most emotional people will make decisions at the wrong time. They chase after a big move, they change strategies, and they do the same over here. They bail out and they change strategies at key turning points. And I believe we're starting to see a bottom here, very similar to this leg up. I think we're starting to see a leg up like this that could lead into something much bigger going forward. And we talked about this in a mentoring session a week or two ago as well. And how I believe there's not a whole lot of downside left in this, that there's more upside potential. And this is a good opportunity to get in. If the Canadian dollar exchange was about to break down, it'll have a clear exit signal very close, but it has a lot of upside potential to continue to mature. So holding U.S. dollars is still what I do. I hold mostly an entire portfolio actually is in U.S. dollars. From that perspective, I like what I'm seeing here, and we have had a very nice run. I wouldn't be surprised if we see some hiccup or pause. Again, this is the daily chart. If we look at the monthly chart, let's take a look at the monthly chart and just zoom in here. This chart, you can see we've poked up into these upper levels. Each time it's got up to these levels, we have seen a bout of selling. This is a massive I'd like to say bull flag, but overall it's a little bit big of a flag. Typically, if the flagpole is this large, the flag shouldn't be that long. You never see a short pole in a massive flag longer than the pole. It'd be dragging on the ground if there was no wind, if you were to look at it that way. But overall, this is a giant launch pad and is holding its ground through support level here. In fact, if we go to the daily chart and just zoom out a little bit, we can go way back here. In fact, if we were to just draw a box through here, this is a pretty critical level. Right through these highs, right through the middle of all of this noise, and these highs and lows. This is a very critical turning point for the U.S. dollar to find some traction. The Canadian dollar exchange is starting to rally. Obviously, let's get out of the way here. It's up here. It is very close to moving higher. So that's my take on the Canadian dollar and exchange rate for that. Okay, let's take a quick look at a few other commodities here. Let's take a look over at gold. Gold continues to be building this bull flag pattern. It is consolidating. It's deciding, trying to figure out if it is a top or if it is a pause. Obviously, we've had a little bull flag pattern here. We had another, this is the monthly chart, another multi-month bull flag here. We had a pause and pullback here, and we are in another significant move right here. Now, overall, this pattern is very similar to what we saw in the performance that we've seen in the past couple of years. Is very similar to 2007. This could show a big blow-off move if it does start to run to about $4,100 US. If we look at the 2008 comparison, we have very similar market conditions. Long story short, let me just zoom out here. We are in this potential phase right here where the stock market is poking to new nominal highs. We've covered this chart many times. We're poking, to, let me just draw across here. We're poking to new nominal all-time highs, which we did right over here. Gold was trading right up at all-time highs. It had a bit of a consolidation, just like kind of what it's been doing here. This yellow line is gold. And then, of course, as the stock market really started to break down and sell off, we saw gold shoot higher for that last significant run. And I think we could start to see the stock market at any point start to sell off in a significant way. And gold is going to shoot up as that last hurrah, that last push, that emotional move as a defensive play to the upside. So very concerned where stocks are going here. Bullish on gold, but we do need to see if gold is going to break free. But overall, we keep having people wanting to know about gold every single day. You missed updating on gold. Nothing has changed in gold. If you follow my analysis, you know the story has been the same. We've been consolidating here for 1, 2, 3, 4 months. Nothing has changed. We're waiting to see if it's going to break out and have some legs to the upside. It could become a discretionary play. I may want to play this move with an ETF like GLD or the Sprott gold ETF for a play to the upside. But overall, we just have to let it play. Just because it's going sideways doesn't mean anything dramatically is changing. It's just in a pause. If we look at silver, which again, I don't recommend silver or miners because they're just volatile and noisy. Big sell-offs, huge pops and drops. That's the monthly chart. If we go to the daily chart, you get a better feel of the noise. You can see it pushes up and then it sells off. Again, most people go into silver because they want to make more money, but typically it creates a lot more noise. It creates a lot more frustration. And I know a lot of people keep emailing us saying they're really frustrated, and silver miners have done a lot of damage to them, which probably means they literally have been buying after these rallies and buying at the high, and they've pulled back. If we look at SILJ, again, this is just a sign that people are emotional, and they see a big pop up and a gap higher, and they're buying these highs. If they're saying they're taking losses on silver and silver miners because it's really pulled back recently, that means they must have paid a high. And that's what we're trying to avoid. That's what our whole newsletter does. This is what we focus on, as I try to not get you sucked into this hype. Don't go for the big swings and hope you're going to make money. And I know there's the whole silver side. Everybody talks about the silver squeeze, the short squeeze that's coming. I've heard that for 25 years. And the collapse of the U.S. dollar, which has never collapsed yet. Until it proves itself, we don't really want to do that. Silver's tough, and silver miners, and even gold miners. Gold miners, if anything, are the more stable play, but you can see they've gone really nowhere as well. They're actually pushing lower, putting a lot of pressure on people. When the stock market pulls down, which it has the past week, you can see here it's pulling It's also pulling this down with it, miners. It's even pulled gold down. If we take a look at gold itself, because the dollar's had a big rally, we have been seeing gold pull back as well. So if the stars align, and eventually they will, and there's big selling in the stock market, we're going to see the dollar rally and stocks sell off, and gold will eventually sell off in a pretty significant way. But you do not want to bet on the downside of gold. It is still loading up here and primed and ready for one big push to the upside. One more that I want to touch on here is copper. We've talked on this in our mentoring sessions. We do 2 of those every month, and there's a lot of people getting involved in copper, and that is simply because it's hitting some new all-time highs. Typically, when something shines all sparkly and is outperforming everything else, people move to it like a bug zapper light, which we had at our fishing lodge, which the mosquitoes and the black flies and the horse flies, I swear to God, there's moose flies. Man, they are so big, they take a bite out of you and you bleed. But people get attracted to things when they hit new all-time highs. And then we talked about how dangerous, I'm not a big fan of copper. I used to follow copper a long time ago, but to me, it's not so much a great global barometer of the economy. But if we look at the monthly chart and we just draw a line across here, you can see more or less, it's got these rising highs, and each time it gets up to these levels, we see big selling, sometimes multi-year sell-offs. And we poked up through this, and this, when we talked about it in the mentoring session, and I think in a video a few weeks ago, several weeks ago, talk about there's tariffs move. There still is tariff news around this, but don't mess with stuff that is super volatile, that is like at all-time highs. It's at the upper end of its range, and there's all kinds of news around it. I mean, that's what I don't like about single assets or single stocks, is they are very volatile. I like the stock indices. I like the big basket. So when something hits it against what your trend is, it's not going to get clobbered because it's slower moving beast. It's a massive basket of things versus one commodity with one piece of news, and it drops 20% overnight. And that's what happened with silver. It's just, or copper. Sorry, it's dropped significantly. I'm not sure what the COPEX miners are. Let's just take a look at the COPEX miners. Let's just go to see where they are this morning. So they've sold off fairly significantly, but they're nowhere near all-time highs. And it's just showing this is a much more news-driven move around the commodity and tariffs with copper. So again, just because something's hitting all-time highs doesn't mean it's a good play, doesn't mean that you should be in it. I know it gives people FOMO when people see things making all-time highs and having huge runs, but there's always going to be lots more trades in the market. Don't feel like you've missed something because something's hitting all-time highs and everyone else is talking about it. And because what's going to happen is you're going to be caught on one of these, you're going to get in, and then you're going to get hit. And this is what I try to avoid, and that's what our newsletter does, is I give you solid advice, solid info to generate consistent growth. You can knock yourself out with every other newsletter that dishes out all this stuff that gets everybody's attention and sounds good and all that stuff. I'm the calm and the reason side of things. Let's avoid this stuff and focus on what can make us money in a very comfortable way, which is these simple strategies, catching these waves in the market. We can identify market emotions when people are fearful and dumping shares, when the institutions and people are bullish and buying shares. We can identify what's going on behind the scenes and just catch these simple ETF trades. So with that said, I spent the last week with my son, my dad, and my brother-in-law and his son, and we went fishing to Lost Lake Wilderness Lodge. These are all the lakes where our campground was right over here, if you can see my mouse. As soon as I saw this map, I told my son, let's go all the way to the bottom of the map, and then let's go all the way to the top of the map during this week. And so we were in this lake, and we took an ATV ride down to this little trout lake here. We caught some beautiful little trout. Brook trout, I think they were. And we had taken an ATV ride there, and then we fished this lake, and you had to portage and go all the way to this other lake, up this little river, portage again, work your way through this river in this boat. And we went all the way to the end, and it was pretty amazing. We caught sunfish, jumbo perch, we caught huge smallmouth bass, all kinds of them. We caught pike. And it was a ton of fun. So here's a little bit, some photos. My son, absolutely, who doesn't love driving a boat and cruising and trolling? There's my dad, and Ben and I having breakfast at the lodge. Every morning we got breakfast, and at nighttime, there's he caught the first fish of the trip, a little brook trout down, pretty amazing. This is our first little stringer of some bass. We did a nice bass with some lemon myrtle shake on it, which is absolutely so tasty with butter. There's us just cruising and fishing. There's my son's first pike, and he caught it on his first lure. First time he's ever caught anything on a lure. Usually we always use live bait, so he was pretty excited there. And he thought it was just pretty awesome. There's another stringer of some fish. We let most of them go. We would just swap on the stringer throughout the day. Get rid of the biggest ones, get rid of the smallest ones, and we'd eat a couple for lunch that were kind of the perfect size, but nice smallmouth bass. Of course, my son loves the jaw shot. And more or less, this is us just cruising home. This was last night. We tried to get a walleye. We never got a walleye on the trip, and this was us just kind of enjoying it and having a good time. So anyways, that was us, and take care. Bye-bye.